There comes a time when you want to learn more about ETFs and mutual funds. There are people across the U.S. that don't know much about these two investment vehicles, but today I'm going to talk to you about both of them. Hey there, Money Explorers. Today we're going to have some fun comparing two super popular ways to invest your money: mutual funds and ETFs. Think of them as different flavors of ice cream. They're both delicious, but each has its own special taste. Hi, my name is Tommy Cloud, and I am president of Third Act Retirement Planning. I started this business back in 2000. Praise God, he still has it in business today. And I am a certified financial planner and qualified Kingdom advisor. I also studied finance back in college and majored in that as well. So imagine you're collecting baseball cards. Instead of buying just one card, these investments let you buy a whole collection at once. Cool, right? Both mutual funds and ETFs help you spread your money across lots of different investments, not putting all your eggs in one basket. Now, here's where we get to the main differences. Mutual funds are like having a professional coach picking your baseball cards. They choose what to buy and sell, but it costs more money for their help. This is how it's been historically. They are now even making ETFs where they actively manage the stocks inside of them. So it's not just mutual funds that are doing these now. ETFs are more likely to be buying pre-made collection that copies what the pros are doing. In other words, the ETFs oftentimes will just be tracking an index, nothing more. These are cheaper. ETFs are typically cheaper, and you can trade them anytime during the day, just like a stock. So which one's better for you? Let's break it down with some fun examples. Pick mutual funds if you like having an expert making decisions for you. Number two, you don't mind paying a bit more for personal attention. Or number three, you're okay with only trading once per day. So a mutual fund, you place a sell, let's say it's 2 o'clock in the afternoon, Eastern time, and the sell will not take place till after the close of the market at 4 o'clock or 4:30 for mutual funds, depending on which one we're talking about. And you won't see the change in your account until the next day. Whereas with ETFs, you'll see the change in your account instantaneously, immediately, but the money won't settle until the next day, which is normal for stocks. So you want to pick ETFs if you want to save money on fees. ETFs can be really low cost. You can get exposure to a great index like the S&P 500 at a very low cost. And furthermore, it's you know what you own every single day, number two. And then number three, you can buy and sell whenever you want, which we've already discussed. Now, here's some interesting facts about ETFs and mutual funds that a lot of people don't know. We've already talked about one of them. Number one, ETFs are usually cheaper, like buying candy at the grocery store instead of at the movie theater, as an example. Number two, market expansion. The ETF market has expanded significantly, with total assets under management reaching $6.7 trillion across the U.S. by the end of 2022. Now, the substantial increase in AUM reflects the growing trust and preference for ETFs as investment vehicles. And if you'll stay tuned, I'll tell you which one we use for our clients as well. And I want to pause here for some station identification. You are watching Sudden Wealth Stewardship, where we talk about how to be wise stewards of the money that you've suddenly inherited, whether it is through an inheritance or winning a lawsuit or maybe NIL money or even the lottery. We don't know. Or selling your business or finally deciding to retire and access your large 401k. In all situations, you're going to want to have help with these, I believe. I think it's biblical to do that. I think seeking counsel is wise. I think it shows humility. And I think it'll end up being more effective for you and your family long term. Let's go back to ETFs and mutual funds. The global reach, as of 2024, the global ETF market had amassed assets totaling $15 trillion. Now, this figure demonstrates the widespread adoption of ETFs on a global scale and their increasing dominance in the investment world. Also, in 2021, the SEC approved Bitcoin futures ETFs, making a significant milestone in the inclusion of cryptocurrencies in ETF offerings. And as an example, for some of our clients, including my own portfolio, for those that want to take more risk, a lot more risk, or just have some exposure to Bitcoin, you can now buy an ETF that invests in Bitcoin. And the ticker symbol on that is Indigo Bravo Indigo Tango, or IBIT for short. Mutual fund assets, despite the shift towards ETF, mutual funds still hold a larger market share at $21.6 trillion. But I wouldn't get too excited about that if you're a mutual fund lover. This does indicate that while ETFs are growing rapidly, mutual funds continue to be a significant player in the investment landscape. I do want to point out, though, two recent trends to be aware of. The ETF industry has seen a substantial influx of $1.7 trillion in 2024 alone, with the U.S. being a major contributor to this growth. Meanwhile, mutual funds have experienced a reduction, losing $2 trillion over the past 3 years ending 2024 as investments shift their money towards ETFs. This is a big change. That's a big difference. For ETFs to receive $1.7 million in additional new money, 1.7 trillion with a T, trillion dollars in 2024. Meanwhile, mutual funds lose $2 trillion. And to give you an idea of furthermore how much ETFs are catching up to mutual funds, at the end of 2022, ETFs only had 6.5 trillion and U.S. mutual funds had 22.1. Now, as I just mentioned previously, the gap is more like 21 million for mutual funds and 15 trillion for ETFs. Only 6 trillion apart now. Your ETFs are gaining ground in popularity, and I anticipate them passing mutual funds. I did want to say, and I told you I would tell you about whether or not we use them for our clients. We use ETFs more for sure. We don't use them exclusively and only, though. We still, on occasion, will use mutual funds when we want to have a special investing strategy. They are more expensive, but if the performance warrants it, we will, on occasion, use mutual funds. Now, keep in mind, mutual funds are still cheap out there. So I can go and find cheap mutual funds, but they just don't trade, in my opinion, as easily as ETFs, especially now that we have a one-day trade settlement. Mutual funds have always had a one-day trade settlement. ETFs used to have a 3-day trade settlement from the day that you place the trade. Now it's just one like mutual funds. So from our perspective, we just don't use mutual funds a lot anymore. We do really like ETFs, very inexpensive, very easy to trade, and they're coming up with more and more different strategies, including cryptocurrencies, active managements, which has been excellent. So we are putting out more videos. I would encourage you, if you've gotten anything out of this video, I am trying to grow my channel and greatly appreciate all of your likes, all of your comments, and all of those that subscribe to the channel. God bless, and we'll see you on the next video.